Our next and final guest is Stephen Simmons of WaveBasis. Stephen Simmons was a research analyst at Tudor Investment Corporation, where he built and managed trading systems with tens of millions in assets under management. Later, he was CTO at Ag Squared, Director of Technology at Ideal Lab, then American Towns. So with more than 30 years of success, he's a veteran in the worlds of quantitative finance and internet technology. Now the founder and CEO of WaveBasis and the platform's oldest active customer, Stephen is on a dedicated mission to advance the science of Elliott Wave analysis and serve the Elliott Wave community with the best tools possible. So this is a unique presentation. Stephen is going to talk about his WaveBasis software that he has developed and show you how he uses it. Over to you, Stephen.
Okay, just quickly, a little bit more about me. As Jody mentioned, I sort of started my professional life working at Tudor Investment Corp in the early 90s with Paul Tudor Jones. That was where I first was exposed to Elliott Wave analysis. At that time, well, first I'll say my background is in computer science. I'm a computer science engineer. So my focus is on the technology end of the trading equation. And I've had various roles as in technology leadership over the years. And that brings us to about 2015, where I started getting more interested in kind of returning to my Wall Street, my financial trading world roots, and got attracted to Elliott Wave analysis. But what again, as a kind of a computer guy, I was longing for a faster and better way to do it. And at that time, I wasn't really satisfied with the available tools. So I decided to, it started off as sort of a side project to see if I could come up with something in terms of algorithms and pattern detection and things like that. And that gave birth to WaveBasis. So with that, and now that brings us to where we are today. I just want to give you guys a sense of where I fall personally in the equation here. We've heard from a lot of what sound like professional all day, everyday traders. I'm not that. All day, every day, my job is to run the WaveBasis company and manage the technology. But I am always in multiple trades, because although I don't trade every day, I'm in multiple trades at all times because I manage my traditional long-term equity portfolio, about 25 instruments. Most of my trades in that domain are trading around those long-term positions, either hedges or catching moves in the direction of my holding. I also manage a long-term crypto portfolio, and the same thing. I trade around those positions. Also, about a year and a half ago, 2 years ago, I was approached by a group of colleagues and friends who kind of wanted to get in on what I've been doing, and they put together a fund for me to manage their crypto in. So I do that. I also run a private trading group with just friends, family, and colleagues who like to stay in touch with what I'm doing. So I very much split the fence between tech guy, CEO, and trader. And that leads me to my overall approach to Elliott Wave trading. And we've heard a lot of talk about the basics, the nuts and bolts, and Ralph Nelson Elliott and his original thinking. But I find that a lot of times people see, and I remember how I was when I first started trying to gain expertise in Elliott Wave analysis. You see all these numbers and letters and Fibonacci and lines and things on the screen, and it all seems kind of abstract, almost as if you're looking at a squiggly line on the screen and you're trying to predict what it's going to do. I find it to be useful to remember that where this comes from, what Elliott Wave analysis is, it's a very ultimately simple process. It's based on the simple idea that humans behave in cyclical repeating patterns. like everything else in the universe, everything we know operates according to a pattern. That's how we orient ourselves in life. And this is obviously not a new concept, as we see this. This is why marketing works. This is how we can predict traffic based on what human beings are likely to do and under different circumstances. Same thing with movie screenings. You know, if Hollywood does a screening, they know when people are likely to laugh or likely to cry or likely to get up and leave. And so this idea that people in groups behave according to some statistical probabilities is nothing new. It's nothing fancy, and there's nothing abstract or conceptual about Elliott wave analysis. It's just a framework that provides a mechanism for measuring and tracking what are naturally occurring patterns in human behavior. So it's I like to think of it that way, and it helps all the way through my mindset when I'm trading to realize that I'm not looking at a random number going across this chart on the screen. These are actually people that do predictable things. We all do predictable things in groups. And so that's what's going on here. And one of the sort of analogies I like to point out to people is I liken the process of tracking a wave count or tracking market movement using the Elliott wave framework to tracking a hurricane. You know, a hurricane, and if you're a day trader, it might be more like tracking a tornado. And the reason I think of it that way is, as everybody, all the other presenters know, and anybody who has practiced Elliott wave analysis, you have to keep updating the wave count. Things can change. Even when you think you know what's going to happen, you still have to track it. Pay attention to what happens next, because that's what's going to give you the best. What's going to align you best with the probabilities for what's likely to happen next. So I refer to it as the down to earth Elliott wave philosophy. There's no smoke and mirrors here. It's nothing unusual. This phenomenon appears in everything we do as a civilization, really. So more of my approach, I don't use a lot of indicators. I use pure Elliott wave analysis, and WaveBasis itself is kind of a result of my personal approach. I've sort of also focused mostly on the original work of Ralph Nelson Elliott. I think of him as kind of a Sir Isaac Newton, you know, and some kind of apple fell on Elliott's head, and he discovered something that is a naturally occurring phenomenon, and he came up with a way to track it. I complement my analysis with basic momentum oscillators, RSI, MACD, and volume for confirmation, just sanity checks to make sure I'm not doing something stupid if I'm maybe looking at the wrong wave count or something. Along these lines, I rely heavily on market context for guidance. Meaning small patterns don't have any meaning to me unless I understand what the larger long-term context is for a particular market. And some of that may be familiar to some people, but if there are any questions about the context, we actually have a lot of material on our website that talks about context and what that means. The focus of my analysis and looking for turning points or trading setups or trading opportunities, runs its way all the way through the WaveBasis technology itself. Its focus is on probabilities. Others have talked about that today. Price levels and price structure, in particular, the notion of confluence. I find that this somewhat simplified approach compared to, I think, some of the other things that are out there and some of the things we've seen today is all I need to do what I've been doing for about 7 years now, since I started thinking hard about this and putting together the platform. And now, what is WaveBasis? As I said, it's sort of an outgrowth of the way I've been trading. It's a charting platform, which I'll show you around the platform in a minute, with rich automation features for practicing Elliott wave analysis. And one of the common misconceptions that I'd kind of like to address right away is that WaveBasis was not built it's not intended to replace properly practiced Elliott wave analysis. A lot of times people hear, automatic wave counts and they think, oh, great, I don't have to do any work. That's not what WaveBasis is intended to do. It's intended to help you practice Elliott wave analysis better, faster, and more precisely, and with a more of a focus on probabilities, and with ease. So the algorithms and the technology itself is data driven. We've looked at thousands of markets and hundreds of millions of wave counts at this point, and come up with some stuff that you'll see. Who is who is WaveBasis for? It's full of features that can help you if you're trying to learn Elliott wave analysis. You should have some fundamental understanding, and you probably, if you're brand new to Elliott wave analysis, you already have that just by what you're seeing today with the 8-wave progression, 5 up, 3 down, this repeating cycle that happens at all time degrees, time scales. As I said, it will help you apply Elliott wave faster and better if you're an expert. One of the things that, again, I'm a tech guy, so it just annoys me to have to keep choosing Fibonacci tools over and over and over and over and over and over again. And so it's just in drawing Fibonacci lines, I wanted that to just be at my fingertips. So you'll see how that came out. And again, WaveBasis is not a signal generator, although a lot of the wave counts that come out of WaveBasis are tradable as is. I don't recommend approaching it that way. You might get lucky here and there, and it might even work over an extended period of time. But that's not how it's intended to be used, and that's not how I would recommend folks approach it. Use it as an assistant, not as a signal generator. So let's jump over to WaveBasis. So what I wanted to do here, I don't have a lot of slides. I thought I would just jump into some markets, some stuff that I'm looking at now, and some of the nuts and bolts of how I use WaveBasis to trade. So I'm just going to start here with silver. Excuse me. Everybody can still hear me okay? I don't want to ramble on here alone for if I've gotten cut off or something.
Oh, they'll let you know if they can't hear you.
Okay. All right, great. This is silver, and this is a great example, I think, and we'll see why. If, for example, I was approaching this as an Elliott wave analyst, and I wanted to count this, I would do the normal process. I would start counting, and I'd try to figure out where the 1s and the 2s and 3s and the A's and B's and all that was going to go. But because I have WaveBasis, I can just click a button and get an idea. This is what happens when you're on a computer that I used to. There we go. So what we see here is this automatic wave count is telling us we have a 5 up followed by a 3 down. Now, what I do at this point, I would look at this and I'd say, okay, I don't see anything. First of all, I would say all of the wave counts are valid coming out of WaveBasis. Now, one of the things I'll comment on that touches on what Bennett was talking about. We follow a different set of guidelines for leading diagonals than the guidelines that he was talking about in Prechter's book. And guideline is the important word there. And the reason for that is, as I said, we've looked at millions and millions of wave counts, and leading diagonals for wave A and for wave 1 don't tend to follow those guidelines, statistically speaking. So we allow a different set of rules and guidelines to govern the appearance of leading diagonals. For example, here's one right here. There's an overlap. I don't know if there's I don't know if you would, Bennett, consider that a leading diagonal, but we do. So in this case, after I have a wave count here, one thing that we can look at, and you can see over on the right, actually we don't need to see this for now. I'll just show you some of the tools. I don't want to spend too much time going through the available tools in WaveBasis. I want to focus on the markets, but what I think about with these tools here, as I think of them as instrumentation. So for example, we can see it's a way to help if you're interested in a trade to quickly assess a wave count for any potential trades that are setting up. For example, since we have looks like a 1-2 here, if you are interested in trading on a daily chart, you can see that you have a potential impulse setting up with a target of 54.83, and from where the market is now, you'd have to risk 8.7% down to 18.01 here. You'd be risking the wave 2 low here. On the lower degree, these go from higher degree to lower degree. You can see we're, according to this wave count, getting close to a wave 2 at the next lower degree. So it's a little late to get in for that wave 2, and you see that here. But how I would, the first step after getting a wave count, what I'm looking for are the probabilities. So by hovering over the wave 1, we can see a gray box comes onto the screen there, and we can lock that into place. This gray box is the highest probability area of support for the wave 2 coming off of this wave 1 high. I pay close attention to these because they are extremely helpful. Now, one of the other misconceptions, and the first thing a lot of people think when they see something like this on a chart is that's a prediction. That's a misconception. This is not a prediction. This is a high probability turning point. And how does that help you? Well, very often you'll find, as is the case with statistical probabilities, is very often you'll find that that's where the turning point will occur, somewhere in that range. But how that can also help you is a lot of times, as we all know, you get deep corrections or shallow corrections. So if you end up in a situation, maybe we'll see that on some of the other charts, where you're below this area, that can tell you two things. Number one, maybe this is a bad count and we're going to continue going lower, or as is often the case, it tells you that it's a late support turning point. So pardon me. It will tell you that you're late, which is, somebody made a reference to a bungee cord. I find that late supports are actually great trades very often, because not only are you getting to diminish your risk, but markets do tend to snap back when they do that. So that's where we would expect wave 2 to turn up. The next thing I'd look at on this particular count is okay, now we have an AB here. Well, how does that B look? Well, that was a high B. The green area there shows us, as we all know, we're looking for wave C to equal wave A. Well, we've got a high B there, a high green wave C, but it's right where we would have expected the wave B from here. So again, these I call this process painting by numbers. So far, if we're looking at this correction to gain some confidence and build some confidence in whether or not we can expect a turning point to occur in this gray area, so far so good. Now we can look at wave B. Where would we expect the wave C to be? Well, right there. And as you can see, we got a bounce. We're not out of the woods yet, but so far so good. And I do this all day long, and I love these boxes. Now the next thing, suppose you want to trade a shorter time frame. So you're going to be interested in what's going on here after this potential wave 2 bottom. Well, we can drill down and take a look at that. Let's say we want to drill down to a 2-hour chart. Okay, so what we have coming up from that wave 2, And at this point, I have a lot of comfort in moving between time frames without moving the cursor around. But you can link the charts if it's helpful to keep yourself oriented. And that's what I was speaking about earlier. Is higher market context is important. So, if, for example, if we were only looking at this chart on the right side, well, it tells you something about the structure of the move up from there. But where are we? I'd like to see that at the same time, right over here. We're here. Maybe I get some safety if we get up over this 22.6. Who knows? So we can look now at this 5-wave move up here. Presumably, we're going to presume that it's a 5-wave move up for now. And let's take a look at that. How did the wave 3 look compared to where we would expect it? Well, it's a high wave 3. Never going to complain about that, particularly when we can see a clear subdivision here. At wave 4, hitting a nice spot. Or what about here? Now this is an opportunity to take a look. If you'll notice that some of these, some of the waves have question marks next to them. Take those question marks seriously. This could be wave 2, but statistically it's a short wave 2. So why don't we move that out of the way and start paying more attention to what's going on here. Another thing that I'll point out, this is one potential way to count this section up here, and it aligns with what the daily was counting, a completed 5 up, maybe not. What else do we have? Another thing that maybe I'll keep saying the word love, but I love using this thing. I use it every day as often as I can, so I'm not just selling it. We can look at alternate wave counts, as we all know, or most of us should know. And I think Lara commented on this. You should always have alternates. Well, this is a way to quickly look at alternates. So it looks like the 2 best alternates we have is 5 up and a 3 with a completed 4, about where we would have expected it. And we have here the ugly leading diagonal, or the ending diagonal in this case, that Bennett doesn't like, but doesn't look too bad to me. Where would we expect that? 3. I'm sorry, the C. I personally wouldn't consider this quite done yet, particularly given the prospect of this. Again, and this is where I mentioned confluence on that first pager, one pager that I showed you. We'd be statistically looking for the bottom to be about right there. Now, you're not always going to get overlap between different wave degrees. All the presenters know this. You see a little bit of overlap here. But when you do, statistically speaking, it's additive. It can give you greater confidence. And we see this was not a bad hit there. But again, these are not meant to be predictions. This is information. They're probabilities. I think, who was it? I loved how he said it. I think it was Dale in the beginning. I'm just reporting the numbers. That's what WaveBasis is doing. It's giving you a way to quickly get all the numbers you want out of a price structure that you're considering. I didn't follow up and mention what I was talking about earlier at the beginning, that I don't like to have to draw Fibonacci lines all the time. So from any wave, you can see where the Fibonacci's are, and it knows which way you're looking. If you're on a wave A, you're looking for the fibs pointing toward B, or we're looking for retracement fibs. From B, you're looking for extension fibs. You don't have to keep drawing them. And what I find, not only is this convenient, but it gives you an opportunity to really check out a count quickly. You see, how are we doing as far as the expectations, statistical expectations are. As I said, so here we're up over the 200. Here we hit about where we would have expected. It's not just fibs that you can get. You can get your Elliott Wave channels. You can see that there. You see that presumption. I can't find the word presumption that I'm looking for. Sorry. But you can see that wave 5 ended about where we would have expected it, right in the middle of the channel. You can also turn on fans, arcs, and various pitchforks from Andrews and so forth. So you don't have to keep, all of us use Fibonacci tools. A lot of people use channels and all these other things. Not having to spend, so much time drawing them, I find to be extremely beneficial, and also gives you an opportunity. I've ended up noticing things that I would never have noticed if I had to keep drawing Fibonacci's all the time. So you can see here that 4 hit right where we would have expected it, and we get a little bit of confluence there too. So you would have been able to buy right out in the wake of that. So that's a quick example with silver. I guess I'll show you a little bit more of what's going on over here, especially if you're learning. You can get the most important rules and guidelines for any of the wave patterns right here, the little diagram. Also, this tracks. Let me turn off this linking. It's not helping right now. When you hover a wave, it will tell you what that wave is and what the rules are for that particular wave. Well, I'm sorry, wave pattern. There you have it. Also over here, there are several other tools. What might be interesting here, we do have a wave scanner. You can pick the setups you're looking for, if you're waiting for wave 3s, or maybe you like to know about wave 3 during a wave 2. Add your symbols, pick your time frames, bunch of filters on what kind of setups you're looking for, and it will run the wave counts, do the analysis, and spit out the setups. Yeah, so there's a lot of test stuff here. I'm a coder too. So let's take another look at. Let's look at a market that we have some that is questionable. And silver's key to me because I have a lot of metals positions, and I've been waiting for this pain in the butt correction to finish for a long time. So I'm jumping at this one right now. So I think somebody talked about Ethereum earlier. And this one is actually interesting. It's kind of relevant to today, because what I've been testing since June is I'm trying to determine whether or not the June low was the low for Ethereum and a bunch of other ones actually, or that all seemingly bottomed around that time. So I'm testing that by tracking this up from that low. I like to buy early on crypto, so I got in here. I loved it. I love this deep 2 here. Somebody else mentioned you get a 2 pressing right up against a invalidation point there. A lot of people don't. I've heard people say that they don't like to take trades under the 786. I love them. And why this is relevant, because Jody and Emily and I were on a call a couple of weeks ago, and I was looking for this buy here. I was waiting for this. I had my confluence area, and I was waiting for it to get in there, and sure enough. So on this, I don't want to turn this into a boasting time, but I did buy both these 2s and this 4 getting up here. So now the question is, excuse me. Now the question here is, I have 2 counts that I'm tracking on Ethereum. Maybe we can clean these up a little bit so that it's a little bit easier to see. Let's get a little more on there. The question I'm asking now is, has that 5 up completed? If it did, it completed. Look exactly where I had been targeting. So I'm out of this now. If it's not done, then what we're looking at is something like this. We're looking at a deep 4. We already have overlap, so there's going to be some sort of diagonally in the subwaves here. And then we'd expect it to run a little higher toward 2200. This is my primary count here, so I'm expecting this to keep going down to around 1300 eventually. But if it doesn't, we'll get a bounce, we'll get a pop up to here, then I'm looking for 1400. That's how I'm looking at ETH right now. Is there anything else interesting to point out in this particular example? No. Let's take a look at Netflix. When Netflix started to plummet, around the same time as the broader market and everything else was starting to plummet, I eyeballed this and I said, it seems like it's probably going to get down to about the 786 because people are going to be panicking and nobody's going to want to buy anything by that time. Well, now we're down around there, and what I'm seeing here is we can see, let's turn this one off. You can see that we're a little under where we would have expected the C to occur, and we've got 3 down. Looks like 1, 2, 3, and we can look at that. Where we would expect 4, we're up in that area now. This is actually I drew this a few weeks ago, and I haven't corrected it, but we pretty much got it. Let's put it in there now. Let's zoom in on the daily. We'll probably get a little bit more definition here, but this stopped about where I would have expected it, given the confluence of between these 2 degrees and the overlap. So I am indeed short Netflix based on this. We can look a little bit more closely at this section. Actually, the daily is probably a little bit better looking. That's this I'm calling it a corrective rally on AB 1, 2, 3, 4, 5. Another little thing that I had noticed, because I just in daily usage of this, you just will notice things when you can see the fibs so easily. One of the things I've noticed is that if wave C is going to get past the 100%, and it's going to get past the 1.618, the 200 is about where it is going to stop. Anything past the 200, I start thinking wave 3. So this is the outer limit. This is again from observation and the statistics. Anything at around the 200 is I would expect that to be I would call it a late C. So I got short on the basis of that. Let's see here, and this is a little bit closer in. Let's get it all on the screen. This is the 1 minute. I'm sorry, the 1 hour. And you can see coming up here. Maybe that's a little too messy to read. That again, we got a high C there. Again, around it got over the 200. Got down to the support area where we would expected it. Got up to the resistance area for wave 5 and dropped. Again, I love these boxes. Statistics are fun and fun and useful. I live and die by these colored boxes and the fibs that they correspond to. And let's take a little bit closer look at what's going on since we came down from there. I can get 5 out of that, but let's look at a 15-minute chart. And the way I get into these trades is I took this one early on Monday. It popped up a little bit, but I had left some room. I tend to, as Jody mentioned, I tend to get into trades in 2 or 3 bites. So I took my first bite, and I would look to take my second bite. Where's my? I need to. Let's get. Bear with me 1 second. What am I looking for there? So 4. And let's get another one. So again, I like to see my charts timeframes side by side. I find it very orienting. So now I'd be interested, as I said, I've taken the first bite. My style is to take the second bite after 5 down and a wave 2 back. It looks like I might have missed it, but that's a little shallow. So I'm gonna hold out for a higher bounce to add the rest of this position. And again, the leading diagonals that Bennett hates, they happen all the time and they're solid. I have a lot to say about complex corrections based on the data, but I think I'll end up writing a blog post or something to talk about those. But no, that's all I'll say now. But there are a lot of leading diagonals in the data that are perfectly valid, and not I don't know if valid is the right word. They're perfectly descriptive of what's actually happening in the data. Here, this may be more like, so we get, well, that's interesting. Well, that's actually very interesting. Sorry, I haven't actually looked at this. So we may have just gotten a bullseye on the 3, and a little bit of a high 4. Maybe I'll get my wave 2 bounce after all at some point. What else did I want to talk about here? GBTC. This is actually I'm going to look at 2 what I call cheat sheets. I've been tracking. I track a lot of cryptos, but I showed the Ether example because it's the cleanest that I'm tracking up from the low in June. Bitcoin is a mess. But what in those situations, I'm looking at GBTC because obviously it's tracking Bitcoin, but the wave counts are markedly different almost all the time. So in this case, we have a wave 2, a little bit of a shallow wave 2, but in our region, and a subdivision. Subdivisions at the 786 extension are, I consider, high quality. We get 382 and 786 all the time for that first subdivision. And we're coming down and looks like a deep, possibly wave 2. But obviously the possibility here is that this is all of a big wave B or something, and we're going below the 786. This isn't much cleaner than the Bitcoin count, but it does provide a little bit more information. It's kind of like looking at the different views of the same underlying, very different views of the same underlying asset, which can be helpful as an ongoing exercise. Another cheat sheet. I don't trade this, but I track it. This is SPXS. SPXS, it's a 3x bull S&P instrument. Now, some might disagree, but I see a leading diagonal up here with a wave 5 to hit exactly where I would have expected it to hit, and a very deep wave C. Now, either this was some XYZ thing, those, as I think somebody else mentioned, they're just so rare they're both rare and they're both noisy. If you forget that there's anything like an impulse or diagonal or zigzag, and there are no 1, 2, 3, 4, 5s, and there are no ABCs, and you can always count any section of a chart as a complex corrective, any one. It's just noisy from a statistical standpoint. At some point, I may turn those on in WaveBasis, but you won't see any complex correctives in WaveBasis automatic wave counts. You can draw them yourself if you want from here. And that's another thing I should have pointed out earlier, is that any wave count that you get from WaveBasis you are free and encouraged to modify it as you wish. Also, if you ever want to get so for example, if you wanted to count the C by hand, you can draw your waves. Let's maybe something like that. The other thing that you could do in a situation like that is just use a little automation. Let's just count those waves. You can count them and assess them. We got a 3 that got past the 100%, always like that, and a very deep 5. There may be other variations. We can look at other possibilities. Again, looking at alternate wave counts. And for me, again, I keep saying I'm a programmer. I think like a programmer. I don't see why anybody would want to create 4 variations if they could just get them like this and do what you would normally do as an Elliott Wave analyst. Assess your wave counts, look at your levels, look at your Fibonacci areas, and so on and so forth. Just saves a lot of time and gives you a lot more information than if you were doing it by hand. So I guess the reason I wanted to look at this one, wow, I've been talking, I've been talking a long time. Time flies when you're running your mouth about your baby. The reason I look at SPXS is if we think that this is not, for some reason, a solid 5-wave move up, and we think that, and again, I call this a cheat sheet, the way I use GBTC, and we think that this isn't some sort of complex correction, which again, I just don't find them in the data, then we would think that we're going to a new low here. Again, this is just a tidbit of information that I would use when viewing the S&P or stocks in general. I don't think that's going to happen. I think we're going to get this is going to wind up being a very deep wave 2. This is going to rally, which means stocks are going to drop. That's where I am on this. I think I said 3x bull when I introduced this SPXS. It's a 3x bear. Sorry. So that's a quick tour. I don't know if there's, let me see if there's anything else I want to show you here. There's counting the subwaves and the drill down, extremely helpful features for drilling down to, once you have your larger context on a weekly chart or daily chart, and if you're looking to trade shorter time frame, I should have mentioned at the top, most of my, as I said, I have long-term holds all over the place, and most of my trades tend to span days to weeks. But every now and then, if I see something, I might take a day trade here and there. But once you have that larger time frame wave count, and this is something you only have to do, how often do you have to do a weekly wave count on a market? You get that set up, and then you just track it forward using tools like the counting subwaves, drilling down, and you just drill down or reduce your time frame directly. Where am I on the chart to the time frame that you're looking to trade that matches your objectives and your horizon. So with 10 minutes left, I think that we'll leave some time open for questions. I'll say a little bit about what I invite everyone to do. WaveBasis, you can start with a 14-day free trial. Anybody can do that, and you have me on the other end of the line, and I get some help from another trader, Jerry, to answer questions about how to use WaveBasis to apply Elliott Wave analysis most effectively, and we can talk your ear off about that. So I would highly recommend you give it a try and see if it works for you. It's a 14-day free trial for attending this event. All you guys can use a coupon that I guess you'll see that on the post webinar page that you'll get informed about by using the promo code EW Hub 2022, you get 20% off any WaveBasis subscription plan for 12 months. So are there any questions? I don't have my chat thing here. Let's see.
Okay, I'll ask you the questions. Okay, I'll ask you the
Sure.
questions. Great presentation. Okay, I know you did the SPXS, but somebody is asking you if you can do the SPY. But before that, here is a comment. Does your software automatically plot the Fibonacci numbers depending on anywhere you have your cursor? Extension, retracements all together?
Yes, if you are hovering over a, I lost my cursor. If you're hovering over a wave, yes, it automatically shows the Fibonacci. So we can see here, Fibs extensions from wave B, retracements from wave A, extension from wave 4, retracement from wave 3. Anywhere, they're all over the place.
Okay, great. And does the tool look at historical time series data to influence the labeling of the on-screen labeling, or how is that controlled? How much data it looks at?
Well, when you run a wave count, the only data that it's looking at that time is the chart that you're looking at. So if you're looking at a weekly silver chart, it's going to analyze that data. But what it uses to inform itself about how it conducts the analysis and how it devises the wave count and where it puts the labels and all that is based on, as I think I mentioned at the beginning, based on a whole ton of analysis on thousands of markets and millions of wave counts.
Okay, and does WaveBasis capture TSE and VSE data?
TSE from, you mean Canadian stocks?
I guess that's the Toronto Stock Exchange, the Vancouver
Yeah.
Stock Exchange. Yeah, so maybe the
Yeah.
question is broader. What data do you provide?
We can take a look at that. We have over 120 exchanges. A lot of them are crypto, so really solid coverage of North America, 6 Forex and CFD sources, some European exchanges, Asia Pacific, and about 75 or 80 crypto exchanges.
Okay, that's great. And what if there is a glitch in the data or a spike in the data? Is the data cleaned, or is it up to the source?
Well, it's kind of varies. You know, I would say if there is a bad tick that you're seeing a weird spike, we fix those as a very high priority. So if you come across one, it should be fixed in under 24 hours. Just let us know. In general, the data is extremely clean in most global regions. We tend to prioritize the more popular exchanges. So in the crypto world of exchanges, Binance, you know, the bigger exchanges will have, you know, rock solid clean data. North American stocks, NASDAQ, NYSE should never see a bad tick, to be honest. But if you find a bad tick anywhere in any exchange, we want to fix it. The crypto exchanges, there may be some smaller exchanges that have you know, weird data in places. We will get on top of those right away. A lot of times, not a lot of times, sometimes it's our fault. It's stuff that in our infrastructure we have to address. Sometimes it does require reaching out to a data vendor to get them to fix their data. But clean data is, you know, I'm an OCD about that. So yeah, it's important.
Okay, good. And I'm also like, not interested in, you know, spikes. Okay,
Yeah.
and then one last question.
Mm-hmm.
Is there a way to enlarge the font size? I'm a current user of WaveBasis.
The font size of the waves, of the wave labels.
Yeah.
Is that the question?
That's what yes.
No, but I will note that as a feature request. Is it is somebody having trouble reading it?
I think so.
Yeah.
Yeah.
Currently, no, but there is a way to actually reduce. What I have here is is reduce. So that's the default setting. So all wave labels are at the same font. I see that gets kind of cluttered for me. I set it so that lower wave degrees have smaller fonts. So, but
Right.
that's something.
What about zooming in? Maybe that would solve the problem.
Well, it doesn't want the font size will always stay the same, even if you zoom in.
Okay.
Yeah.
All right.
But I'll be honest, that's the first time I've heard that, but I'll note it.
Yeah, I think it might be a good idea to be able to zoom in. It's kind of, challenging for me too, actually.
Is it? Okay.
Yeah. Well, Stephen, I've got to say that when I first brought Stephen on, I brought him on because I thought he had a software that not many people knew about, and I thought it was just terrific. And I'm glad I had you on, Stephen. And I think, a lot of people probably feel the same way and probably feel that this is the first time that they're seeing your software. So I'm glad we could introduce you.
Well, Jody, it's really been a pleasure working with you, and Emily. I've been honored to be a part of this. Thank you so much for bringing us into it.
So now I want to announce your gift, the winner of your gift, which is a 6-month subscription to the trader plan of WaveBasis. And the winner is Adrian Chang. Congratulations, Adrian Chang. You are
Congratulations,
a winner.
Adrian.
Yeah, you're all winners, by the way. But Adrian gets to win this this software.
Well, congratulations, Adrian. One thing I forgot to mention is I think especially useful for those who are learning to interpret wave counts. Automatic wave counts also give you a wave count forecast here that's written out that describes what's happening, what you can learn from this wave count in simple to understand language. So just want to throw that out there.
That's great. Okay. I'm just thinking maybe I can just take the screen back for a second.
Okay.
Let me just take the screen back. Let me just pause this recording. Wow, today was such a great day. So I want to just thank everybody for being here. And on behalf of the top experts presenting here today, Dale, Zach, Rob, Laura, Bennett, Stephen, and myself, I want to thank you for being here. We hope you have found the analysis beneficial to you, and special offers from the presenters can be found on elliottwavehub.com/forecasting event. The recordings for these sessions will be posted tomorrow. Again, Emily, thank you so much for all of the work that you took for you to put this together with me. And if you have any questions, if anybody has any questions, please contact support@fxtradersedge.com, and we will get back to you as soon as possible. We'd love to hear your feedback as well, as this is an ongoing event, and this is the 5th Elliott Wave Hub event in 2.5 years. So I'm very excited about that. So I just want to thank everybody, and we'll be online for the next little while if anybody has any questions. I'm going to stop the recording now. Thank you so much, Stephen. Thank you, everybody.
Thank you. Thanks for everybody for coming.